couple of weeks back, you were surprised at how strong it had been. September had shown even a year-on-year growth in U.S. consumer spending based on your data. What's the latest on that front, and how's the holiday season shaping up?
Sure, Wilf. Let's back up. And our team at Bank of America Securities, Candace Browning Pratt, and the research team is one of the best in the world. They have this year finishing up about down 3.5% GDP growth. The fourth quarter being up again over the 30% plus in the third quarter. But when you look to the first quarter next year, they have it at 1%, and then it starts growing from then up for 21 to be up about 4.5%. So that's the backdrop, a negative 3.5 this year, positive 4.5 last year. But when you look inside what our consumers are doing, when you look at what they're spending year to date, they've spent more in 2020 than they did in 2019, and that is now across $2.7 trillion of money moved by our consumers. And so if you look at it by month, when I was back with you on, I think way back in May, I said you could see it already flattening out, you could see it starting to grow, and you looked at me a little quizzically. You know, the reality is now it's really grown every single month since then. And so the month of November is up about 4% over last November, and the month of December so far is up double digits. And that's a little bit because of the way people were shut down on Black Friday and Thanksgiving. It was a little bit different. And some of that activity, which usually went around the Thanksgiving weekend, pushed in the first week of December. And so we'll see how it plays out. But the consumers are spending relatively strongly.
Well, I don't mean to come back to you quizzically again, Brian, but I guess the question at the moment, with cases spiking, despite that optimistic outlook on the data front, is there a risk of a double-dip recession if we don't see, say, fiscal stimulus in the short term?
Well, let's sort out two different questions. One is fiscal stimulus is needed to ensure that the human aspects of this healthcare crisis don't take a toll that they shouldn't take. And so when you think about people wanting to come to work, you know, we may have people in our companies that want to come to work because they want to come to the office and normalize their life, but they're working every day. There are lots of Americans who can't come to work because their company is closed or they don't need as many people. And that's what we need another stimulus for the unemployment side, for those Americans, and also for the businesses, another round of PPP to support them. That would lower the chances of having what we see in the first quarter next year, a slow growth economic quarter. It would increase the possibility that would be more positive, and you would hit the second half of the year growth rate as you have the convergence of that stimulus plus the convergence of a vaccine being in more people's arms. And so, yes, there's a possibility. There's always a possibility. But with rising cases, you're not seeing the shutdown orders and things having the same effect so far, even through the last few days. When you look at restaurants and stuff, yes, they're changing. But in places like the Northeast and the central states where they hadn't really changed the outcome at all positively, i.e. opened up a lot more, it's being delayed. But underneath it, people spend money. They have to live. They have to eat. They're improving their homes, and things around the home are just going up very strong, and other things are down. You know, restaurants down 25% year over year in terms of spending by credit and debit card spending. That's down, but there's other things that make up for it.
In the absence of political deal and fiscal stimulus, should the Fed do more, or is the impact of their marginal dollar spent by the Fed or marginal action from the Fed now much reduced, such that they should wait and hope that the politicians act?
Well, I think Chair Powell has been clear in that in terms of the need for fiscal stimulus. The Fed has done a lot. And by the way, the work the Fed did and the administration did, Secretary Mnuchin and others around this crisis, was really going to be the textbook way to respond quickly, deeply, across the board, and move, and Congress backing up. And that enabled this whole pandemic crisis to be a lot less than people thought. The Fed's rates are near zero. They've got the market stabilized. We're talking about IPOs being open, and debt issuance strong, and the rate structure is low, and mortgage lending is strong. They've done a lot. There's lots of facilities out there. It really is a question of getting the last part of the American economy that is still effective in the heavily affected industries, generally those that require people to be close together to conduct the activity, going to a stadium, going to a theater, eating in a restaurant, flying on a plane. That needs to be helped. That is a fiscal question, I don't think a monetary question.
Shepard Smith here. Thanks for watching CNBC on YouTube.